Hi, this is Olly Cummings, the Commercial Director of CBILS. Declan's kindly asked to put together a piece on the current lending market and capitalise. I want to thank Declan and the team at UK 200 for this opportunity. We'll also be available next Wednesday, 20th of May, from 12:30 for a Q&A. And if you have any questions, please give me an email at oliver.cummings@capitalise.com. So who are CBILS? We are founded in 2016. We've done over 180 million of secured lending to SMEs, and we've got 40 plus employees and rising. We did a Series A round of 3.5 million in February, and QED investors came in. We've raised overall 5 million and have approximately 1,600 accounting partners. I am an ex-accountant myself, working with EY, Smith & Williamson, as in audit and corporate finance. And I've also helped build one of the peer-to-peer lenders called Market Finance. It used to be called Market Invoice in my day. So that's a quick overview on CBILS and looking at what we're about. So we would always have talked about being in a new era of banking. And the fact that 15,000 bank branches have closed in the last 10 years and 55,000 bank managers have left the market, that has created a huge wealth of digital lenders coming into the market and even turned banks into digital lenders themselves. And it just meant that since 2001, there's been an absolute increase in the lending market. And it's created almost a paradox of choice with regards to what lender to go to, who would be the best lender for that particular situation. And that really means that SMEs did need a lot of help in that market. Business owners don't really do things regarding funding that work in behavior. Obviously, many are very savvy, but there's quite a few that will really look at actions that don't quite optimize the situation. A lot of them only look for funding 7 days before they need it. Look only for an hour and typically just apply to their main bank. And that's in a pre-COVID time. And realistically, most SMEs are profitable, but many of them don't do their management accounts. So a lot of them live in the day-to-day and they only have about 10 to 15,000 pounds in the bank on average at any one time. So they are quite fragile, and a lot of SMEs are needing help in looking for lending. But that's a kind of quick overview of what we would have talked about kind of pre this current crisis. But as a platform with over 100 lenders in the market, we've actually had a very large change in the last couple of months because we have entered a new world. So that's Leicester Square. That's actually Trafalgar Square. And in April, and 99% in decrease in volume of people walking. There's a few people there, but actually a lot of them are bins. So it really has, the world has changed very recently, and that's had a huge impact on the funding market. So looking at what's happened to the VIX, the volatility index, it really did increase. Uncertainty was huge, and looking into the future, we know now as obviously Boris has started the kind of stage process of finishing the lockdown, there really is going to be a long time where we are kind of recovering from this situation. And we're in the crisis now, and we're probably going to start moving into what we'd call a recession based on the contraction of the economy. And then hopefully before long, we will enter a recovery period and everything will start to return to normal. But right now, there is quite a lot to be done with helping your clients get through this period. And this is where we can give you some advice and help in this situation. So the government started in the crisis with some grants, job retention scheme, the furlough scheme, and some income support. And that was very well documented. You can go onto our COVID-19 page on our website where you're going to see much more detail on that. Lending was very active pre-COVID-19, and then most lenders kind of retrenched very quickly and moved straight into what we would call the CBILS loans. And then actually the bounce back loans started to come into effect, and they were brought in a couple of weeks afterwards. And commercial lending, we do expect to continue, and it will come back to the forefront, but with the guarantees given by the bank, it will take some time to get to the most common type of lending back in the market. So looking at these, we've got the bounce back loans, came a bit later into the crisis. 14 banks currently are looking at the loans, up to 50K, one time only, and it's very importantly a self-declaration. And we're seeing decisions from 24 to 48 hours. The rate's fixed at 2.5 years, and the term is up to 6 years. And actually most companies are getting this with an acceptance of 80%. And then CBILS, the Corona loans, 60 plus lenders, kind of increasing quite a lot. We're speaking to a lot of our lenders, and a lot of them who aren't on are now trying to get on. So that will be a changing landscape as well. And we do a weekly update to all our partners around who's in and what's happening at this very moment. And going through our system, you'll know who's been selected if you're looking for those loans. That's between 50K and 5 million. Potentially multiple times that you can get that loan, and there's full underwriting, taking some time up to 2 weeks, and it's the rate of 2 to 9%, and again up to about 6 years. And we're seeing acceptance of around 45% of those loans, and that really is the kind of key driver of the kind of larger part of the S and the M in the SME space. And then you've got commercial lending, where we've got 100 plus lenders. You've got invoice finance, merchant cash advance, secured and property, full underwriting. Decision is still quick, up to 2 weeks. Rates can vary hugely. I mean, the market ranges from 1.5%, 2% to 50%, depending on what you want to do. And the term obviously ranges from a very short 1 month working capital or advance of an invoice, all the way up to a full-blown mortgage on properties 10 plus years. And at this very moment, we're seeing acceptance of somewhere between 20 and 40% of those. And that's obviously come down in the crisis. So applying for a bounce back loan, 14 banks are offering this at the moment. As a lending product without underwriting, it does come with a lot of declarations. You've got to be engaged in trading or commercial activity. You can't be a bank or building society or in the public sector. You've got to have at least 50% of your revenue from trading activity, so it takes out a lot of the property sector. Your business could not have been in difficulty pre last year, so decent serviceability and debt to equity ratio, and it can't be a part of the wider group which has received CBILS, subject to debt relief order, and use credit granted only provide economic benefit to your own business. You do not have a benefit of the protection remedies that would otherwise have happened in the CCA 1974, which means you would be liable if you were using for other sources of income. So that's quite an important piece at the end. Applying for CBILS, we very quickly, when this came into effect, brought it onto our platform, and you can do a search. We need 3 years of full accounts, 6 months bank statements, management accounts, aged debtor and creditor lists, debt structure, statement of assets and liabilities, and cash flow forecast. So because of the amount of volume going through the banks and the other lenders, they really are keen to get a lot of information from the onset. What do they mean by kind of viability to get the CBILS? The bank lending is now almost entirely manual. They are really analysing the last 3 years full accounts and MI, minimum trading of 12 months, and they're looking for the retained profits over the last 3 years as a driver to really find out what the serviceability is. And they're looking at cover of typically 1.5 to 2 times retained profits, and that's still the case. So if you've got repayments of circa 40K, you really do need to have retained profits of 75K plus, which can be a problem for some of the more deeply impacted businesses from the COVID-19. You can apply also through for commercial loans still. There are still lots of lenders looking at these, and a lot of businesses that haven't been so affected by the current situation. There is still lending out there. We also suggest you run that in parallel with the CBILS lending, because particularly if you've got invoice finance or flex facilities, they are very active and still quite common. It just depends on the kind of what your business has done in the recent time. So what would you do if your clients asked you about business funding? That's the kind of key piece right now, and that's where we like to help. And if you're at the moment, if you're not looking at helping with business funding, or you're kind of maintaining some relationships with banks, or have someone locally on the ground that you're using, we can come in and help you in that situation. So why would you use CBILS? We help you as a firm. We train and educate you to be the access point for funding for your clients. We have our funding specialists, account manager who looks after you, and strategic lead helping you through the process. And through our platform, we give you access to 100 plus financial advisors. That's the high street banks, the independents, and a large amount of fintech providers as well. So it gives you real coverage of the new lending landscape. And we are 4 times more successful working with accountants than we are working direct from the market, because the lenders really do appreciate accountants being involved in the process. So the funding areas we cover are trade finance, merchant cash advance, asset finance, working capital finance, forms of secured and property finance, and invoice finance. And also we are helping with CBILS as well at the moment. So do more than refer, actually build a service line. We can help you with up to 30% share of commission on successful applications. We have additional revenue by assisting your clients with produce management and information and forecast, because funding is not just about the actual piece of funding. Actually, a client would want help pre-funding, looking for the right amount of funding, and actually once you've had a large inflow of cash into the business, you're looking for forecasting and other help from your accountant post the funding. So it's actually a really good part of a wraparound service as you're moving towards the kind of more advisory piece of work with your firm. So we already have plenty of people using the platform. We're proven technology, and we have from the UK 200 group, we're working with Danes, Saul Goldie, Neil James, FFT, Ellicott, and Armstrong Watson. So kind of proof is there. We will be working with you, and we'll be more than happy to work with other people within the community. So thank you very much. I'll try to keep that quite brief. So I imagine there might be quite a few questions. So please contact me directly at oliver.cummings@capitalise.com, or I will see you next Wednesday at 12:30. Thank you very much.